see the reciprocal tariffs will affect export supply chains or investor confidence for emerging markets like Indonesia, especially if it's targeted to China, which is also one of our biggest trading partners?
Yeah, look, I think in the short term, you're going to see a little bit of hiccups in the supply chain until the deal gets ironed out with China. So maybe a matter of days. But a lot of people bought goods up front in anticipation of some short-term volatility in supply chains. So if they can come to the table in the next 2, 3, 4 weeks, I think the supply chains will be pretty great. And then I think moving forward, it will be seamless and things will move forward on a normalized basis. You know, the thing people need to keep in mind with the tariffs as it relates to Indonesia in particular, it's not the end of the world. 10% tariff is, the deficit is 18 billion. The total trade is 30 billion. So $2 to $3 billion in tariffs for access to the largest consumer market in the world in the United States is not the worst thing ever. The other thing is these level ups in prices, they're one time. It's not 10% compounded at 20% a year. It's 10% one time. They take the level up, and it should be just fine for the U.S. consumption and for the global economy.
What is global investors' expectation about Indonesia government response to tariffs?
Look, your Indonesian government was very smart. Okay, they chose not to retaliate. That was the absolute right move. They're going to wind up with a great deal with the United States, as opposed to China. You saw what happened to China, which is basically an export embargo in the short term. But they'll eventually come to the table and they'll come to a nice agreement as well. But your government made the right choice for sure.
Could it expose certain vulnerabilities of Indonesia?
Look, I think that this is going to have a positive impact for Indonesia. I think Indonesia is going to be able to do great business with the United States. I think Indonesia is a growing, industrious, educated population that's going to attract a lot of capital flows over the next 3 to 5 to 10 years, because the bulk of your population is very young, growing, expanding, and industrious. So I see very good things for Indonesia, and that would be a place that I'd be focused on investing.
What's the potential impact on global trade flows and inflation?
Look, I think in the short term, as I said, the trade flows could be a little bit bumpy in coming weeks. But again, people pulled forward a lot of their imports. I think these deals are going to be looking like they're making progress in coming weeks. So I think, once it's in place, it's going to flow seamlessly. There will be short-term hiccups, but I think intermediate term, it will be business as usual.
So the chance for the cut rate will be bigger in June?
In June, I think everything is fine by June. I think that you're going to see most of the deals have been ironed out between the U.S., emerging markets, China will look a lot better. And I think that not only will the tariffs be in place, but I think more and more trade will be facilitated by the ongoing dialogue that has been so sorely lacking in recent years. And that is going to benefit emerging markets. And I do think you're going to continue to see the weakening of the dollar, which is going to facilitate investment flows in countries like Indonesia and emerging markets. So we have a very sanguine outlook for your region for sure.
How do you see the Fed's cut rates for this 2025?
Yeah, I think for 2025, I think we're going to see a continued momentum with global growth. I think we're going to see more and more trade, just the opposite of what everyone is predicting. They predict less trade. They predict isolationism. They predict protectionism. I think once the rules of the groundwork is laid and the contracts are signed, I think people are going to want to do more and more business back and forth once everything's been evened out. There's a fair level of tariffs. There's a fair level of non-tariff barriers that are removed. I think it'll facilitate more and more trade, more and more velocity of money, and it'll be very good for the world.
And how is the possibility of U.S. recession?
0. I think it's a very low probability right now. I think there was a risk if these tariffs were not paused and they continue to drag it out for 2 or 3 or 4 months, I think you could see a severe loss in consumer confidence, a backup in investment. There were a lot of risks that were present by keeping it open-ended. Fortunately, it was only for a very short period of time to bring over 70 countries to the table. And as a result, now I think you're going to see markets start to recover, consumer confidence start to recover, business CEO and CFO investments start to recover, guidance and outlook start to be a little bit better as we get more information every single day, as trade agreements are negotiated by country, and we see the headlines come across. And then the biggest thing that you're going to see, particularly in the US, is we're going to see big tax cuts coming, which is going to spur massive growth and a lot of reshoring coming into, a lot of investment coming into the U.S. So expect good things. When the U.S. does well, everyone does well, and I think this is a step in that direction.
And also, how is the possibility of stagflation in the U.S.?
Zero. The stagflation is a fantasy invented by economists who read in a book that if you have a tariff called Holy Smoot, you have a Great Depression. The fact of the matter is the United States raised tariffs for 10 consecutive years from 1918 to 1928, 1929, before you had Holy Smoot, which was coincident with the Depression, not necessarily causal, because tariffs had been rising for the previous 10 years. It may have been the buildup of tariffs, but there was a long runway there. It wasn't one day they woke up, put a tariff on you, and you had a Great Depression. That's a kind of a false narrative that has been taught in the textbooks, and is simply not accurate.